Hello, I'm David Scranton, and thanks for watching. On today's video, we're talking about real estate investing and whether it should be part of your retirement plan. Now, we've covered this topic the other day with Robert Kiyosaki, so be sure to watch that video if you haven't yet done so. But today, I wanted to get a financial advisor's perspective. So let's bring in our next guest, Stuart Chamberlin. He's the founder and owner of Chamberlin Financial Services in Boca Raton, Florida. He has more than 30 years of experience helping people in the financial services industry. Stuart, thanks so much for being here with us on The Income Generation.
Thank you for having me.
So you understand real estate because it was something that earlier on in your financial services career you were certainly involved in. So tell me, what do you think are some of people's most common misunderstandings when it comes to real estate and whether it should or shouldn't be in their respective portfolios?
Well, a lot of people don't understand the amount of work that's involved in managing a property, finding a property that makes a lot of sense, a business sense. Real estate is not just a business; it's also not just an investment, but it's also a business when it comes down to managing it.
Now, have you seen real estate, and I don't mean just people's homes or second homes, but have you seen the demand for investment-based real estate go up in value since the pandemic?
Well, certain types of properties, depending on demographics and locations, yes. The demand for multifamily, our area here in South Florida, obviously, there's a huge demand there. There's not enough inventory during COVID, during the crisis. There just wasn't enough properties being built to service the amount of influx of people into the area. So a lot of people are investors are thinking, why can't I just get into real estate? Like some of the, stories and articles that they're reading of people doing well in real estate and creating income streams.
Yeah. And it's interesting because right here in Fort Lauderdale, as you know, 10 years ago, there were very few apartment buildings. And now there's a lot of brand new apartment buildings that actually came up before the pandemic, but there's more and more going up now post-pandemic. So it's good to see because there's certainly a need for that post-financial crisis as fewer and fewer people can really afford to buy real estate. The younger generation sometimes has to rent for a while. But sticking to the investment part of it, what are some of the most common questions you get from clients about investing in real estate?
Well, I have clients that are experts that have been doing it for many years. Then I have clients that have never really ventured into real estate. This is their first time even considering it. They'll come to me and want my advice as far as an advisor, if it makes any business sense based on their overall financial plan. And when I take a look at the property, I look at cap rates, I look at what's their exit strategy, the financing that's involved. These are all important things that you have to take into consideration, plus management of the property. People don't realize that if you have a management company, you're looking at around 10% or so of your annual revenues going to the management company. And if you do it yourself, well, then that's a lot of work, and sometimes they're not realistic as far as how much work is involved in your retirement, in your golden years here. That will be eating up your time in trying to manage a property. Sometimes they'll go in small. They want to do a triplex or duplex, but there's a lot of problems there as far as what's the profit margin and the amount of time you're spending managing a small property like that versus a 16 unit or 32 unit property with many doors. That's actually more advantageous to do that. If you're in a duplex or triplex, let's say a duplex, and somebody moves out, you just lost 50% of your monthly revenue right there. It might take 2 or 3 months to get somebody back in there, and you're responsible for the mortgage, the debt on the property, the upkeep of the property at the same time.
Yeah. And if you're in California, for example, where there's been a moratorium and you can't kick out tenants that aren't paying, it puts the property owner in a difficult situation.
Yeah, that was going on here. That was one of the issues for people that own apartment complexes, versus the duplex. There was pros and cons there, that they could not evict them, and but at the same time, they still have debt and operating costs that they have to consider.
Mm-hmm. So I'm sure you have a few people that, try to flip properties or do things that are more speculative, but you mentioned net operating income and 20 and 30 unit apartment buildings. So it sounds like obviously most of the strategies that you do recommend for people are more income and cash flow based.
Well, yeah, I mean, buying and flipping properties, it can be very cyclical depending on, where we're at in the market cycle. Sometimes it's advantageous to do that, but most of the time, buying a property that's already cash flowing is more advantageous. And your exit strategy doesn't always have to be selling the property 4 or 5 years down the road. It could be just refinancing at a lower interest rate. That's technically a type of exit strategy, by refinancing at a different rate later on versus selling the property.
Mm-hmm. Okay. So, 20 to 30 units is great. And hey, maybe you can go out and write a check and get into a 20 or 30 unit apartment building, but I know lots of our viewers cannot. That takes a lot of capital. So what do you recommend for those folks for whom real estate's maybe a good thing, but they just can't afford to do it in any scale?
Well, having a small percentage of a much larger sum or much larger portfolio of properties makes a lot more sense. And that's where something like a real estate investment trust can come into play. There's many types of REITs, what we call real estate investment trusts, that you can go into that are focused on a specific property type. So that would be one thing to consider versus going in and trying to go into something on your own or with a group of people.
Stuart, you're right. REITs can be a great thing, but in some cases they could be a very bad thing. And I find that they're misunderstood. A lot of people who invested in the 80s confuse real estate investment trusts with real estate limited partnerships. Maybe they've had bad experiences with private versus public. So what are the good, bad, and the ugly when it comes to real estate investment trusts?
Well, there's many forms, like you said, of real estate investment trust REITs that you can go into. You have your non-traded and you have your traded. The non-traded REITs, some of the cons on that would be that it's liquidity. Liquidity becomes an issue in a non-traded REIT, but it gives you that steady income without market fluctuation. The traded REITs, on the other hand, are fully liquid. You can sell them anytime you want because they're publicly traded. But at the same time, you have market fluctuation that you will not have in the non-traded REIT. Back in 2000, I believe it was 2017, there were some new laws that came into place as far as what investors can deduct. They can deduct up to 20% of the ordinary dividends before income tax is assessed now on real estate investment trusts, which is also a tax advantage.
Mm-hmm. Well, I can't believe it, but you go into stores and there's already Christmas decorations up. So it means we must be getting somewhere near the end of the year here. And being that, what are your best tips for those watching this? Year-end tips for those that are part of the income generation?
Well, if you're nearing retirement or in retirement, focusing on income, not growth, changing your mindset, shifting to focusing on creating income streams. People in their retirement are much happier when they have a guarantee or a steady flow of income on a monthly basis or annual basis versus clients that are focused on a large portfolio of assets that are fluctuating up and down with the markets, which can bring a lot of stress and anxiety to them.
Great. And Stuart Chamberlin, of course, as you know, real estate can be part of that portfolio if done properly. So, hey, it's our pleasure. Thanks so much for being here with us today on the Income Generation.
Thank you for having me.
If you enjoyed this interview, make sure to click the thumbs up button to give us a like. And don't forget to subscribe to our YouTube channel for more interviews with top financial names in the industry.